presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last few years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
Wow! Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off on Tuesday trading. You got a little bit of tariff talk. Trump says there's no more extensions. We got copper action out there, but S&P is holding steady. We're negative by just 3 points, and context is everything, folks. You know, we are basically at all-time highs. Okay, yeah, we had a little bit of a pullback yesterday. The pullback yesterday, all we did was give back July 3rd. That's it. We're sitting right now on July 2nd. Folks, you had a high at 62.79. We're trading at 62.72 right now. So in light of some of the letters going out, some of the tariffs, and everything going on in this market, handling things very well right now. We jump over the VIX, and you have a VIX that continues to trade lower at 16.75 right now. That's well off the high of 18.50 yesterday. NASDAQ in the green, up by 6 points right now, 22,890. You get the Dow off 0.3%, leading the way in the red, off 145 points at 44,532. And the Russell, negative by 17 or 8, positive, leading the way. The Russell catching the bid today at 2246, up by 0.8%. And yeah, so yields, dollar, so important right now. And this run the 10 years on, man, we're at 4.42%. And, you know, I find myself pivoting pretty quickly to say there's a real chance here that if the numbers line up they line up on the jobs number, it's going to be very difficult to get 2 to 3 cuts this year, I think. And then where do you go forward in May? And as the chairman would say, it's going to be data dependent. But things are changing quickly as you're up almost 25 basis points, almost a full quarter point cut in the last week alone. And that's given the dollar a little bit of a bid. And I say little, as in we just traded from 110 to 96. Yeah, we've bounced one. You want to see something wild? All right. This is where you want to put your brain when you say, all right, what kind of bounces are possible here? Still within a healthy bounce in a downtrend channel. You can get a bounce all the way up to 101. We could trade up to where we were on May 12th. And all that would be is a 382 of what we've done since the beginning of this year, which is a remarkable move. So dollar catching a bid, and yeah, gold pulling back a bit. But you jump over the headlines, no tariff extension. Now, if the market really believed this, I think it would be lower, because that would be quite a severe risk coming down the line on August 1st, right? But Trump vowed to push forward with the aggressive tariff regime, stressing he would not offer additional extensions. It's almost like he knows, as everyone was saying, there's just going to be more extensions. Now we get to find out what happens on August 1st in 3 weeks if they don't make a deal. And it's very hard to make those deals, as we're finding out. This is the 90 days. 90 days was tomorrow, July 9th. We have an extension to August 1st, but the market's not reacting as they shake it off, and the VIX is an important component of that, as the VIX with a 16 handle. And let's get to copper. So he's going to impose a 50% rate on copper products being sent into the U.S. And yeah, largest intraday gain on data going back to 1988. 50%. You got drug levies in there as well. I believe the tariff on copper, we're going to make it 50%. Yeah, it was up. Now, you talk about these equities, though. So Freeport gets a bid. They give it back slightly, but you're still up by 3.6%, and they have been on a tear already, some of these. And then you jump over to Southern Copper. They give it all back. Oof. It's got to be a tough day when you own Southern Copper and the president slaps a 50% tariff on it, and you catch a bid and you're going to finish in the red. This market rolling over a bit right now. It's the S&Ps. So check a look at the, Southern Copper, okay? This is covered in the gold report. You get some big volume shares on the way up. You got a nice sign of strength. When we got the 90-day reprieve, this thing was diving lower, okay? You break out of that channel. If you can come back down here and get a nice channel test on lighter volume, that'd be a nice buy on Southern Copper. Now look at that chart. That's going back to May of 2024. Okay, and if you take a look at this chart, you can see you run up, and then, man, that was a well-defined channel on the downside. So that's a 3-year weekly going back. And then you take a look at Freeport-McMoRan, quite a different chart. Yeah, you had a run-up. You did. Well, we're right where we were in January of 2023 right now. Versus Southern Copper, we're still down at 73. Southern Copper's looking strong, man. You break out of this channel. On a volume basis, we do these extraordinary days, but that was a nice sign of strength. 8.9 million shares the week of June 23rd as you broke out of that channel for Southern Copper. Freeport-McMoRan. Not quite the same level of volume. You're still going to be bumping up. Check it out. September 23rd. Look at that. That's last year. 102 million shares in September of last year for Freeport-McMoRan before you fell out of bed from 52 down to the lows of 27. And just like that, we're back at 50. But where are you bumping into? You're bumping into this bar from September 23rd when you did 102 million shares. But this is going to be some volume, so we'll see how it trades. Because look at this. We're on Tuesday, and we've already done 53 million. Yeah, big numbers. Now you jump around to some of the gold stocks, the XAU down about 4.3%. These equities just finished up a 1-to-1. So it makes sense. You consolidate and you're pulling back a bit. You're off by 4.3%. You jump over to the HUI. I mean, how perfect is that 1-to-1? Perfectly. Both of them. XAU, HUI, you complete it. Both of them off about 5% today, no matter where you jump around. Harmony shares off about 5% today. These are some of the strongest equities out there. New Gold's one of the strongest equities out there, down 5.6% today. All right. Let's jump around to some equities. Tesla up by 1.3%. So the report out there. SpaceX, how about a $400 billion valuation? Yeah, there it is. Elon, he's firing on all cylinders, man. $400 billion as they sell shares, and yeah, as you posted in the den. How about Mr. Zuckerberg, man? He is everywhere, right? I was talking about this morning. They poach an AI lead team lead from Apple that was managing 100 people over there. They poached them, but guess what? Yeah, how about $3.5 billion for Luxottica? Whew. They are really plowing into everything. And they have these glasses at Target. I've tried them on. They're pretty cool. It's got to make some progress, but man, as they acquire almost 3% of that company worth $3.5 billion, they are a partner now. They're an investor in that company, man. Wearables. Hey, what better wearable, right? Than glasses, watches coming at you. We're coming back with our man Basil Chapman, folks. Don't go away.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps right now negative by 5 points. You have the NASDAQ 100. We are flat right now in the NASDAQ 100. And right now, folks, we're going to jump over to our man, Basil Chapman, as we do every Tuesday at 3:15 p.m. Eastern Time. You can check out Basil's outstanding program, 10 a.m. Eastern Time, Tiger Technicians Hour, and right on the front page of TFNN, folks, the opening call. Check out Basil's outstanding service. It comes with a number of amazing webinars Basil's done for his subscribers over the years, and you can subscribe. It's only $149 for a month, folks. You get a 30-day money-back guarantee, and yeah, check it out. Basil Chapman, good afternoon.
Good afternoon, and how are you?
I'm doing fantastic, man. How about yourself?
I'm doing well, thank you. Yes.
Now, Basil, I think...
in Boston. Yeah.
Sorry to interrupt. I think you got to refresh your chart if you don't mind. If you could do that while we're kicking it off. And then you can tell me, how's the beautiful weather in Boston going? Because I know you guys have had some heat waves up there, but how are we now?
It's really hot. It's gone, I would say, pretty darn hot. And I'm scheduled to play tennis tomorrow. I'm hoping that I can do it. So let me just see if I've got this right. I thought I had everything set. Let me go.
You had posted it, Basil. For some reason, it wasn't coming through. I think if you just refresh it, we'll get it going.
There it is. Okay. I think, we got it. You got it?
I got it. We're good to go. All right. We got the Dow. What are we doing with the Dow, Basil?
So let me just explain. On the left here is the daily chart. In the middle is the weekly chart. On the right side is the monthly chart. So I've been saying, I think I even said last week, that I anticipate that we're starting to bump into resistance levels. And so far, the technicals are all very strong. So you can get in front of it, but I don't like to do that. I like to see a cohesion between looking at my Chapman wave notations, the technicals, and even the, let me just pop this chart up for a moment here, and even the dark news index. And at this point, I'm just starting with the yields starting to move up again. And the just the whole thing with tariffs, just in the very short term, I haven't done anything yet, but every time I put in a rectangle, it's usually a case that I'm looking at some kind of maybe an internal high that could go to a residual high. So it's just a kind of a warning sign. I've done nothing yet. But so I'm kind of cautious, and I'll explain why. The Dow made a top of 45,073 back at the end of 2022. Then early January, it retested it by going to 45,054, 30 points away. Then it tumbles down, remember, to the 36,000 level. And all of a sudden, what does it do? It rallies up. And this one has been a very steady move with peaks, and I label each peak alphabetically, sequentially as they move up, A, B, C, D, E, F, and I make them uppercase on the way up, lowercase on the way down, and at D, that's when other things can happen. Well, it looks to me like at 44,885, 3 sessions ago, that there's a chance that on a very short-term basis, we're bumping into resistance and we could get some kind of a pullback. I haven't got any sign yet other than this potential double top. Now, what's very interesting, if you go through all the others, I mentioned this peak D or a little higher, the E or F, you've got to be somewhat careful. So here we go. Here's the S&P. Right there, here's the S&P. And that is, I said here, but I forgot to click on the chart. Here it comes. Okay, S&P, peak D. So we've got to be a little careful in the daily, but the weekly chart is only in leg C at an all-time high 3 sessions ago. That is really bullish. And the monthly chart broke out. I hate to say it, but I think it could be an A and not a G. G says, oh, be careful. A says, are you kidding? Every single pullback you got to buy. So I'm leaving that for the moment to say we've got to reassess at the end of the month. But mostly what I'm looking at, if you go to the QQQ, that has gone to a peak E. And we haven't pulled back very much. 2 sessions, just a little bit off the all-time highs. But look at the weekly chart, leg B. If there's no new high this week, it'll be a peak B. But this is incredible. With all the technicals, the MACD, the stochastic, the unbalanced volume, everything's in line. The 9-period moving average is very strong. And now what is really a big positive for 2025 is that the IWM has finally started to become an independent. And what I mean by that is that the 200-period moving average, if I can just move this across, there it is, that the 200-period moving average, this yellow line, has been such strong resistance, all of a sudden now, for the first time in quite a while, months and months, it's become support. So I like that. And the weekly chart has improved quite a bit. So looking at, and I must go through the SMHs because the SMIs usually lead us up and lead us down. They're holding very well just off the all-time high. But I've got to watch this closely because the support is at 269 and we're at 283. So there's a little bit of way to go for us to pull back, but that's going to be key support if there is a pullback. So now the other thing that we're looking at is I like to use some particular stocks as a kind of a little barometer. So Robinhood I've spoken about for a long time, kind of a real market participant, not a Dow, not a NASDAQ, it's just by itself as a broker. It's done extremely well, all-time high at 100.88 on the 2nd of July, just kind of stalling here. I should mention that we are still long from this, have a position from the 16th, and and it's at 91 right now. And General Electric's started to stall after potential double top, 257.47 on the 6th of June, and 260.55 at the end of June. And it's just stalling here. So the stalling says to me that the upside, unless there's a trigger for another big spike to the upside, I don't know whether it's tariffs, whatever it is, I'm just thinking that the market deserves a breather, and that's kind of what it's getting. I don't have any signal to say short everything. I'm saying there are certain parameters that they hit. I would like to start short position in the market. I haven't done that yet. I should also mention that we are long General Electric from 198, so it's at 247 right now. And I haven't really wanted to do very much other than take a little bit off because this has been a leader for the cyclical. So there are certain aspects that are really important. Now, I thought I'd show you this. The IAI, which is the broker-dealer ETF, went to an all-time high yesterday of 172.05. And look, there's a big red candle. But when you look at the chart, this is like an eye blink. It doesn't. It's like it's nothing. So if the IAI at 189 actually starts to trade under 165, sorry, 169 right now. If it starts to trade under 164, that's going to say, okay, now you've got your at least a catalyst for some kind of move to the downside. Now, I thought I'd show you something I consider quite important. And that's this 9-period moving average over the 14. Look, here's the Dow daily. And look how every pullback, the green line, which is the 9-period exponential moving average, has held above the 14. Even when it had that strong dip in June, it held. And then it gives us, it's like a spring to the upside if it doesn't turn pink. And look what happens. So it's pulling back, but the price of the Dow is above the green 9-period moving average. The 9 is above the 14. And if you look at, I'm going to go to just part of our portfolio, Robinhood, look, fabulous action, pull back, but the price is still over the green. The green's over the 14-period exponential moving. That's usually very positive. General Electric, which I was just talking about, did go underneath, but it hasn't turned pink yet. So that's a good sign. So when I'm looking at this way, I'll even show you gold, which we have a position in the physical gold, but the gold itself, look, that has been pink, and it's having trouble. It's struggling to get over the black line, the 9-period moving average, to turn green. So as I'm looking at it right, and then IBX, I didn't talk about that. Sorry, this is right here. If I've got a moment, I'll give it to you. BAII. We got in what am I doing here? Anyway, we've got this
Basil, that's okay. We got to run, but that was a tremendous 9 minutes. Thank you so much, man. That was so much great information. Hey, those weeklies are something else, man. Thank you, Basil. We look forward to the show tomorrow.
Thank you.
Have a great one.
Focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
folks, and great information from Basil. Check out the opening call, folks. Check out the Tiger Technicians Hour after my program at 9 till 10. He comes up at 10 o'clock. And yeah, how about those weeklies, though? I was saying to Basil in the chat even afterwards. It's pretty remarkable. We were talking to Steve Rhodes yesterday. Steve made the point about the consecutive closes in the market, if you were watching that, especially in the NASDAQ. In terms of, I think he separated the NASDAQ and they separated the NASDAQ cash. But it was 2 to 3. And you can see there's no consecutive red bars on a daily basis. Okay, we got 1, 2 bars here. You got a 2-bar pullback here. And you got 2-bar pullback there. That was it. Over a period where you rose from 16,400 to 23,000. Now, it would make sense that you're only on a leg B or an A when there's no pullback to start the next leg, which is remarkable, but that is everywhere. And it's not often, folks, that you can have a percentage-wise acceleration like this, where I'm talking about the S&Ps going up 25% off the lows, and meanwhile, yeah, you barely have a pullback. Okay, look at the daily on the S&Ps. Yeah, we had a 3-bar pullback here, 2-bar pullback here. Besides that, man, it's been a straight shot. There have been no pullbacks whatsoever, which is remarkable when you put that on the chart. Now, let's jump over to Meta. So, Meta's flat right now. We go to the 5-minute to see a little bit of the volatility. Okay. You got news coming out that, yeah, and it's not just this stake, okay? They're coming for maybe 5% of the company. Yeah. Meta's considering a further investment. Imagine any other business, right? You buy 3% of Luxottica. You're buying 3% of a $100 billion company. Even more than that. When 3% is 3 billion euros. But guess what? The dollar's weakened tremendously, and now that's 3.5 billion US dollars. But they want 5% of the company. And they already have the Ray-Bans. They're launching it, man. Those things are in target. They need to perfect that product. But, yeah, he's still all about it, man. He has not lost the whole Meta deal, even in the face of AI. But now AI has given him a market cap that's going to allow him to fuel those aspirations with purchases to the tune of billions in that. And I was talking about this morning as well, because they poached an Apple engineer. And if you didn't check out the program this morning, right, folks, take this out. Meta right now is about a $1.8 trillion company. So let's just call it $2 trillion for simple math, right? Meta's about a $2 trillion company. And they're handing out $100 million bonuses. That would be like a company, if you owned a small business that was worth $2 million, okay, and you handed out $100 bonuses, right? That's how little that money is, $100 million, compared to a company that's worth $2 trillion. And that's what's at stake when you look at that. Now, put that number to $3 billion. So what is $3 billion comparatively? Okay, $3 billion for the size of the company that Meta is, pushing almost $2 trillion, okay, would be like if you owned a small business that was worth $2 million and you could acquire, 3% of Luxottica for $3,000. Your business is worth $2 million, and all you have to spend is $3,000, and you are an investor, and that's what it is. That's what $3 billion is to a $2 trillion company. It's the same thing as if you had a $2 million company and you invest in $3,000. You can see how those multiples, if they pay dividends for the top and the bottom line, yeah, you better believe it, man. It is a big number. Excuse me. So, and they're probably going to go for more, because guess what? They need to be on a wearable, and they don't have the iWatch. They don't have all of that. But guess what? They're going to be a huge investor in Luxottica now. And who doesn't love sunglasses? And guess what? Where does the metaverse go? Think about it, right? They bought the VR firm already in terms of going into their own VR, and now they're going to do the same thing on sunglasses. And they're probably going to merge the two, the Oculus. That's what I was looking for, the Oculus, right? Oculus Quest. They bought that company, and now they're going to merge that technology, and they buy the biggest manufacturer, and they don't buy them. It's even better, right? They just buy 5% of them. So they can't lose that partnership. They got that partnership forever. I think it's a great move. All right, with that in mind, folks, let's jump over to our man Tim Ord. We talk to Tim every Tuesday and Thursday at 30 past the hour. We're getting Tim ready. And you can reach Tim at his website, every trading day, ord-oracle.com. And don't forget, folks, under the services tab, check out these webinars, okay? When you got time to kill, Maybe you got some summer weekends, some summer nights, whatever it is. The secret science of market tops, how to identify market tops. And then you also have the 6 secret ratios every trader should know. Both of those webinars, $149. And the way it works is you sign up for the webinar, and then you gain access to it forever. It's always on your account page. You can watch it as many times as you like. Check it out, folks. Tim Ord, good afternoon.
Good afternoon. Good afternoon. So, anyhow, should we start?
Let's dive into the charts, baby. That's why we're here. Let's do it.
All right. Okay. The first chart is the SPX tilt ratio on the weekly time frame. That's this chart up here. Next one lower is the SPX. And anyhow, this is the SPX tilt ratio on the weekly time frame. So this is a weekly time frame. But anyhow, what I want to point out, the SPX tilt ratio a lot of times leads the SPX. And I just want to point out, going back in early 2025, this ratio is making lower lows, and the SPX is making higher highs, and that's the divergence. So you got to pull back. But since basically it'd be May to the current time frame, the SPX has been making, this is a weekly, higher highs, and also the ratio, SPX tilt ratio, is making higher highs. But I want to really point out is, you see this little, right there today, the weekly SPX tilt ratio closed at a new high, if you can see that.
Yep.
And if you notice down here, the SPX, this is a weekly time frame, didn't close at a new high. Okay, that's relevant. Again, the SPX tilt ratio leads the SPX. What that says is, at some point, the SPX is going to close at a higher high. So even though we're consolidating here with yesterday and so far today, we haven't seen the end of this rally, put it that way, according to the weekly SPX tilt ratio compared to the SPX. That's what I want to point out right there. So we've been long here for June 25th. We'll see no reason at the moment to get out. So this short-term rally is still going on here. And here's another thing. This is the second window. The bottom window is the SPX, the SPY VIX ratio. This is on a daily, and the top window up here is the SPY.
You want to hang with us?
All right. Yeah, sure.
Perfect.
I'll hang with you.
Folks, we're going to take a quick break. We're going to be talking with the SPY. We're going to be talking the VIX. And yeah, these ratios are so awesome, Steve. Tim, I would listen to you and my dad talk about, of course, but the VIX is at 1683, so it's amazing, and I see how it ties in. We'll talk some SPY VIX, folks. We're coming back with Tim Ord. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got the S&Ps off by single digits. NASDAQ 100 off by single digits as well. Dow off by 148. We're talking to our man, Tim Orden. Yeah, don't forget, folks, head on over to the front page of TFNN. And as I mentioned, we're talking these ratios. They're right there, the 6 secret ratios. You can start off with those. One of those being the SPY VIX. And what I was saying there, Tim, at the end is pretty cool. You know, because I love the fact that they're not just ratios that come out of nowhere, as in it makes sense. This is pretty amazing how we have the VIX kind of dissipating here, right? And how that then is that, and I don't want to put words in your mouth, but is that how you look at something like this ratio where, and you don't have to explain it all, but is that how? Because it makes sense, man. The VIX, man, nobody seems to be worried about this market, and that is usually, you know, it can be bullish as you have the market. How do you look at that when you look at the SPY VIX for those that might not be as familiar? Does that make sense how I'm talking about that?
Yeah, well, the VIX actually goes down when usually the market goes up. So basically, if you ever look at a long-term VIX over the last several years, anything below 16 on the VIX is basically a lot of times you have a trending market. And it's pretty close to that, you know. Sometimes it's 18, and we're hitting it, you know. In the
we are,
we're in that range right now.
Now, yeah.
So
it's a nice number. Anyhow, no, it is. Go ahead, please.
But anyhow, the VIX a lot of times trades the opposite of the SPY. If the SPY goes down, the VIX goes up, and vice versa. So that's the reason why I do the ratio, the SPX-VIX ratio, because both of them, you can see the divergence is a lot easier. So as the SPs go up, you want to see that ratio making higher highs as long as the SPX is making higher highs or SPY. And that's what we have here. Starting basically in May, you know, the SP's kind of creeped up here, and the ratio is making higher highs. So that's what you want to see. So, but if we were making higher highs on the SPY, and that ratio is making lower highs, then that's something you got to watch out for.
I mean, it could be. And not to jump in, but it's so cool how it works, because it would be cool in that case, right, Tim, that you'd have an elevated VIX. Like the market's going up, but there's a sign there, like the VIX is going up. And so the ratio has a problem, and the market's pricing in that people are paying more for insurance. So that's how I think about it, you know, which I think is so cool.
Right.
That it makes so much sense. It does. That's why I think those ratios are so cool, folks. Check out that webinar. It is, because it's awesome, Tim. I didn't mean to interrupt you, but I think it just makes so much sense.
I'm glad you do. So yeah, I want to answer your question. So this is, you know, if you got questions in your mind, the listeners have their questions too, probably the same ones you have.
It took me it's a complicated market enough, and then you get into the ratios. But I think once the people make that and they're like, oh, wait a second, that's what this ratio is telling me, right? It's like, now I've listened to it. Like, yeah, I better be aware if the VIX is spiking, and this is going to tell you, folks, if the VIX is spiking, because the ratio is going to change, even if the market hasn't quite reacted yet, which is so cool.
Yeah, it's kind of a forward-looking indicator, kind of like tilt. You know, the tilt's the bond market. So you
Totally.
make relationships. Yeah, so that kind of leads the
right?
way.
What are
But anyhow,
yields doing? Yeah, right. Yields versus the market.
yields.
Totally.
So anyhow, but yeah, let's look
Okay.
at the bigger picture. We don't have a lot of time here, but
Go
we
for
did
it,
have
please.
a breakout in mid-June. This is a weekly chart. We did close above the previous highs of February. And you did have a sign of strength. This is 255 million shares compared to the last high of 170 million shares. When you break a previous high, it has to be at least equal volume, if not higher. And we did that. Obviously, volume is a lot higher. So we broke above the previous highs. Now we got, 608, 609 support. So bigger trends up. Even the short-term trend, I think this mild consolidation we had a couple of days on the S&P is just a timeout and an uptrend. I bet before the week's out, we're starting to close in new highs. The reason why I say that is that tilt ratio, or the SPX tilt ratio closed at a new high. So that leads the market. So anyhow, that's that. We got 4 minutes for the gold market here.
All right.
I put this at the June close. Just want to make a point there. We did close at 71.30 on the RSI on the XAU. This chart goes back to 1988, a long way back. And those red lines here show the times when the RSI closed above 70 on a monthly chart. And again, June closed at 31. So I'm not bearish here at all. I'm super bullish, but I think we'll get a pullback to around 75 on the XAU. So you just time out an uptrend, nothing real bad. Here's this high tested this high on lighter volume. So we got, and this low here broke below this low. And if you notice, that low broke on higher volume. So at minimum, this low is going to be tested. And we're trying to test it right now. But this is a monthly chart, this is a weekly chart. But anyhow, in a nutshell, I think we're going to at least hit 45. And I think actually we'll get down to 40. So it's going to, the last part of the decline is usually the scariest, and that's the best time to buy. So nothing big there. But a lot of people kind of ask me, why do you pick out these gold stocks? Well, here it is. I actually have had this gold stock. I sold it, and actually I bought it a little bit higher, bought it wrong. But anyway, I did buy some right here, actually 10.03 cents, and which was a little bit too quick. It was the bottom, but in a nutshell, this is the monthly. The stock is ROFF. It's Rio 2, whatever. But anyhow, you get a buy signal when you close above the mid-Bollinger Band on the monthly time frame, and you have to have a sign of strength on the close above that monthly time frame. That's the reason why I got right here, this day right there, closed on a sign of strength through the mid-Bollinger Band. You can see it there. And you got it back in here, same thing. You got to close above the mid-Bollinger Band with the sign of strength. That's the highest volume you had going back to, a couple of years. So this is a sign of strength day. So that's what I want to point out. And you stay long as that stock stays above the mid-Bollinger Band. So, which it did. And it started to pick up energy, see how steep that rally's going there. Well, okay, you got your buy signal at, let's say you take the close, let's call it 30. And when you get a sell signal, that's when you get 100% above the upper Bollinger Band. There you did. So I'm out of this stock now. And there you did back in 2020. If you can see it, you're 100% above the Bollinger Band. This flipped sideways for a couple of months. And I don't know what's going to happen here. It's probably going to flip sideways. But this reason why you're selling 100% above the upper Bollinger Band, you're 2 deviations away from the average mid part of that Bollinger Band. You're stretched too far past that limit. If you notice here, I drew a trend line when I was doing my analysis right there. So if you stay against that trend line, you just stay long. If you look how far you got from that trend line way up here, so this stock went parabolic. So in my opinion, you're going to at least pull back to the mid-Bollinger Band, and you're a heck of a long ways from it. Eyeballing it looks like you're about 50. But it's going to consolidate, for months probably. So anyhow, that's how you pick gold stocks. You do it on the monthly time frame.
Great trade, man. And yeah, nothing goes up forever, nothing goes down forever. Man, that return, quite a run. RIOFF, I got it up. Tim, thank you so much, man. I appreciate the education, the update as always, and we look forward to talking to you on Thursday.
All right, talk to you then. Thanks a lot.
Take care. Thanks. Folks, we're coming right back, finish up the show. We got S&P's negative by 3, NASDAQ up by 9, Dow off 150. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Always a great segment with Tim Ward. And yeah, those ratios, folks, they don't come out of nowhere. They all kind of mean something when you look at that relationship. And the SPY VIX is a perfect relationship in terms of you look at the market, and then you look at the market price versus the price of insurance, pricing risk in that market. Anyway, check out that webinar under the Services tab. And we got the S&Ps just chopping around. A calm day. It makes sense. The VIX is under 17 right now. When you look at a market that's negative by 5 points, and we are basically at all-time highs that would have been an all-time high as of last Tuesday. You take out some of the Wednesday, Thursday action of a shortened holiday week, and we're sitting near 6,300. We jump around to some of the leaders out there. You got Apple flat right now at 210. Meta on their acquisition of about 3% of Luxottica. And remember, the article says they're coming for even more of it. You got Meta up by $1.75 right now. Amazon shares. Ooh, Prime Day. Not so prime, Mr. Zuckerberg. Off by 1.8% for Amazon shares right now. You jump over to Google, off by 1.5% right now. Netflix off by 1.3%. Tesla shares up by 1.25%. And yeah, SpaceX, $400 billion. Remember, we didn't have a $1 trillion company until, was it 2019? I think it was. And meanwhile, Tesla, we're going to be a private company approaching $500 billion, $400 billion. All right, let's talk a little bit of millions instead of billions. I talked about it this morning, but yeah, World Series of Poker main events going on. And here's how it shakes out. Now, a little bit less than 2024 entries. Here's what I'll say, folks. If you're ever going to play the main event, the way it works is there's 4 day ones and then 2 day twos, and then finally the field comes together. So if you want to play it, if you play day one, you're technically playing day 3 on the 7th day. So most recreational players come in, they play the last day one, which is why this year you got almost 5,000 players on that day. The first day only had 900 players, okay? Then 1,000, then 1,600, then 5,000, right? But there's probably more recreational players, and you got to be out there less often, but it is a zoo. But nonetheless, first place, $10 million, and $1 million to the top 9. All right, folks, thanks so much. Have a great night. Have a safe night, folks. We'll see you tomorrow morning at 9 o'clock for the morning market kickoff. Thanks, everybody.